This is the Empowering Healthy Business Podcast, and I'm your host, Cal Wilder. Each episode, we'll dive into topics important to folks who want to run businesses that are both nicely profitable, sustainable, and scalable, and who want to achieve balance in their lives and realize their potential inside and outside of work. This show is sponsored by Smartbooks, provider of bookkeeping and accounting for businesses. Let's get started. Welcome, listeners. I'm excited to be joined today by Brian Suthoff, who's going to talk to us about credit bureaus and how small businesses can extract value from them. It's not something that, a lot of us in the small business space tend to spend a lot of time thinking about because I think historically we haven't found them that useful, but Brian is trying to solve that problem to make them more useful for us. So welcome to the show, Brian.
Great. Thank you. Thanks for having me. I've really been looking forward to this.
So, Brian, I got to know you a little bit several years back when you were building a previous business called Tally Street, where you were kind of extracting and analyzing customer payment history and risk and patterns with QuickBooks data and trying to help people understand and I think probably ultimately project risk and cash flow, right? And I assume that was some of the motivation for Truverto, but maybe you can briefly tell us the story of Tally Street and what got you started with Truverto.
Yeah, absolutely. Tally Street, the inspiration for that actually was a prior business where my background's not in accounting, it's in data and analytics and a lot of software startups. But a couple businesses ago, I started a liquor distributorship. So not a technology business. But I was selling to bars, restaurants, liquor stores, and I wanted the same kind of information about my customers that I was used to having in more kind of, software startup high tech areas, analytics like lifetime value and churn risk and so on, right? And purchasing histories. And there was nothing like that for small businesses that was kind of affordable and quick and easy to use. So that was the inspiration for Tally Street. And in doing that and working with a lot of business, well, first of all, that went great. Like we had worked with lots of accounting firms like SmartBooks, lots of small businesses, and it was later acquired by Rightworks, who provides a lot of other services to accounting firms. Um, but to get to Traverto, one thing I learned along the way when we were doing that is that the customer information a lot of small businesses had inside QuickBooks, for example, um, was not always, let's say, it wasn't always as clean as it could be, right? So if you think about some of those analytics like lifetime value, well, if you have a duplicate customer in there twice, their lifetime value is going to look like half of what it should be, or however those payments get distributed. So we just ran into a lot of kind of poor data quality problems or issues, things that could be better. And then we also saw businesses struggling with really understanding the kind of the credit risk of their businesses. And as you highlight, it's kind of a tough problem to solve. It's been out there for a while. The tools are a little lacking, so that's what we've been trying to set out and help with.
Awesome. So in a nutshell, what does Truverto do, or what are you striving to do there, like functionally for small businesses?
Yeah. For small and mid-sized businesses who we're really focused on B2Bs. So those businesses who are selling to other businesses. Um, we're helping them get the credit information and company information that about their customers that they can use to improve kind of collections on AR, avoid fraud, automate a lot of processes that used to be manual, just basically I think of, maybe this shows my age, but I think of this old BASF commercial, which was, we don't make the products you use, we make the products you use better. And there's a little bit of that, is that, businesses have the different tools they use and processes they use. And we're not, an AR tool, for example, but we want to make all those things better by making underlying data and information better.
Yeah, I can tell you from experience, SmartBooks has worked with hundreds of small and mid-sized businesses over the years, and they really don't know the credit worthiness of most of their clients. And so we try to advise them to mitigate that debt risk by collecting upfront payments and, suspending service if somebody falls too far behind. You're kind of operating blind to the data. So you're trying to use management practices to mitigate risk in the absence of data that could help assess that risk, right? And so I think the bad debt risk is one challenge that we face, and then the other one is kind of cash flow. We had a client that sold picture frames and framing services, and for their consumer customers who'd walk into the store, they'd pay with a credit card and there wasn't really much risk involved. But for their business to business customers, they'd invoice them on open payment terms. They had no idea how creditworthy they were, if they were really going to pay on time. And their suppliers wanted to get paid in 30 days. And so they had to go pay their suppliers 30 days, and then some customers didn't pay them for 45 or 60 days or 90 days. And so they're fronting money and then hoping they get paid later. And so even if they got paid later and didn't have to take any bad debt expense, then they were still taking the cash flow hit, right? And so I think both of those are big challenges.
Yeah, absolutely. I mean, anytime, in B2B businesses, especially industries like manufacturing or distribution and so on, professional services, it's almost a requirement for sales teams to provide credit terms, or for the business to provide credit terms in order to get some of those sales. And exactly as you said, basically it's a free loan. It's a free short-term loan to your customer to let them pay you in 30 or 60 days. And if you think about it that way, then you can start thinking about all the kind of risk problems, cash flow management problems, that other people associate or have to deal with when offering loans of some duration. And the information out there has been limited, and even what information is available has been difficult to access or use. So yeah, I think a lot of small businesses have essentially self-insured. They just, like you said, they take the risk without knowing exactly what it is, and the result is overall businesses lose about 2% of their sales to bad debt, and increasingly fraud. So overall, businesses now report losses of like 5%, because of fraud. So that it's a growing problem of not knowing a customer's credit risk, or getting all the information kind of right about them and verifying or validating who they are.
And I don't really actually know any small business owner off the top of my head who actually, submits financial information to credit bureaus. I mean, I'm early in my career, like 20 years ago, I'd get all these calls from Dun and Bradstreet salespeople asking me to sign up for a subscription and whatever. And I never did anything paid, but you know, at one point I did upload some financial statements to us get a DNB number and establish some credit history. I didn't, I was 24 years old or something. I didn't know what I was doing really, but I kind of felt like I was wasting my time at the end of the day because there was nothing in it for me. Um, right. So that was the challenge. If there's nothing in it for the business owner to spend the time keeping up with the reporting, they're just not going to do it. But then the data is not there for them to use to evaluate their own customers.
Yeah, I mean the credit score is really critical for a business, and it kind of impacts everybody. I mean, if you know a business themselves, their credit score will impact the terms they'll get from their suppliers, right? It'll impact kind of the loan rates or interest that they'll get from their lenders, and then the same's true in reverse. So you know it's a really important number. It's something, or set of numbers, right? Set of information that everybody relies on, but it has been a little kind of opaque and harder to deal with. I think maybe a little bit of the fun history of credit bureaus back when they started. If you go back to the 1800s, um, you know, even consumers, you'd go to the local grocery store or market, right? And they'd have a piece of paper and you'd buy stuff and they'd keep a tab. And then you'd come and settle up at the end of the month or whatever. Um, well, then they started, just the vendors on the street would start to share information and say like, oh, well, Brian's owed me a few dollars for a long time. Like, be careful. Well, then Dun& and Bradstreet actually got their start by doing that at scale, basically going around and collecting data from businesses, really door to door, way back when, right? Um, and then it moved on, of course, to online, people submitting data. And as you said, that's kind of been collecting the data is something that is, it's funny you mentioned 20 years ago. It kind of, the way it's done today, the way it has been done, still feels like 20 years old, 25 years old, and really contributes to people not contributing, right? And then everybody suffers as a result.
So maybe, Brian, I think most listeners are familiar with, personal credit scores and what influences them and, how that works at a personal level. But I'm pretty ignorant on how it works at the business level. So maybe give us a little background education on how credit bureaus and credit scoring work for businesses.
Yep, yep. And yeah, it's a great question. There are a lot of parallels with consumer scoring, but it is obviously different. So really, the bureaus tend to get information in three primary ways. One is comes from public data. So a lot of listeners have probably gone and checked somebody's, the Secretary of State in Massachusetts or Delaware or wherever to make sure that the business was properly registered and what information's there. And the bureaus do that too. So they automate a lot of that process by gathering public data. Um, Another thing is they do get credit data. So, a business's bank or their credit card provider will also report information. And the third piece that's really important to this conversation, and going back to the history of Dun and Bradstreet, for example, is gathering what businesses pay each other, how well they pay each other, and that's what's really different than the consumer side. I mean, when you go out to a restaurant, right, you swipe your credit card, or you buy a picture frame, you swipe your credit card. The vendor, the supplier, is not really extending you credit. The credit card company is. But when you go to a business environment and you're saying, pay me in 30 days, 45 days, 60 days, you're lending money. So that's a hugely important kind of component of a business's credit score that's unique to the business space.
And so if I'm, IBM selling to small businesses, I can afford to invest in systems to report to credit bureaus, I guess, on the payment history of my business clients. But if I'm a small business and I'm on QuickBooks, it seems like it would be daunting for me to, compile the information if I were so inclined to report it to the credit bureau, right?
Yeah, it's even worse than daunting for QuickBooks users, for example, because the credit bureaus require a certain set of information, and one of those is a customer ID. And when you do your customer export from QuickBooks, it doesn't include a customer ID. So, like, a QuickBooks user can't even go through the process in the old-fashioned way, right? To participate as a data provider to one of these exchanges. Um, but if you did, the process is pretty manual. It's not, the information's not super difficult. It's, the best way to think about it is it's your aging statement. So really, what you're doing is providing an aging statement to the credit bureau. And yeah, if you're a really large enterprise, you can automate that. You've got internal IT teams, developers, and so on, and you can build all that out. If you're a small business, that becomes more difficult or expensive. Um, it's also interesting to think about it from the other side. Like, if you're the credit bureau, if you think about what we talked about earlier, if you're trying to collect information about how well businesses pay each other, you know, who are the good sources of that? If you're the credit bureau, you want the biggest businesses who sell to the most people because you get a ton of data with one effort, right? So a lot of small business information that exists inside of credit bureaus today comes from like staples, right?
Yeah.
Because you're buying office supplies and all these small businesses are buying office supplies and Staples selling to all of them. So they're this really, deep pool of data about small businesses.
Hmm. Are there confidentiality issues that would preclude some businesses from reporting on customers? I would think that could be an issue.
Yeah, no, good question. I mean, a lot will depend on the relationship or the agreement a business has with their customers. Um, but maybe to go in a little bit more into what actually gets reported, because it's not. I mean, any financial data is sensitive, but basically what you're reporting is that, I sold to X business and they owe me $1,000. and they're on time, or they're 30 days late, or they're 60 days late. That's essentially what gets reported. You don't have to say what you sold, right? You don't have to provide any, phone numbers or tax IDs or anything like that, right? It's just really, here's a business and they owe me money, and they're on time or they're late and how late they are. And then when you report to it, when any business chooses to contribute to a credit bureau, your contribution stays anonymous. So nobody else, no, another business who maybe sees their score won't know kind of who contributed what that might have led to that score, right? So it's in a consumer report, for example, you can download your credit report and you can see what your bank said or what your credit card said. All that details in there. For these business payments, it's kept anonymous.
Yeah, and so for me, who's by nature a little bit skeptical, I'm like, well, how's the score determined? If it's reported to me as like a high risk or a low risk or a medium risk, what does that mean? How much data is there behind that? Was that just one vendor who got stiffed and gave a bad score and that's it? Or like, so how do you get comfortable that the scores you get from the credit bureaus for businesses are accurate and meaningful?
Yep. Well, so they all have different policies, the credit bureaus do, but they won't compute or they won't develop a score or a DMB calls it their paydex number, right? The number of kind of how people pay on the how businesses pay on the invoices that they've been issued. They won't do it unless they have a certain number of kind of contributions to compute that score. So one individual, they won't release a score based on one individual um, trade submission, right? Payment submission. So they'll want multiple ones. Um, like credit bureaus or like consumer credit bureaus, the algorithms are part of their secret sauce. So not all that gets obviously shared. But if you think about it from their perspective, if they're releasing scores that are not predictive and not helpful and not informative, then they're probably not going to be in business for very long, right? I mean, that's why people use them. So um, a little bit of the kind of the proof is in the pudding in that they exist, they're demanded by a lot of businesses because they do add insights and value into what otherwise could be a like a black hole, right, of just a lack of information.
Yeah. And I suspect there some industries where this matters a lot more than others, right? If you're a marketing agency and you've got a couple dozen clients and you know them and you know the owners and you collect an upfront, retainer and you can just turn off service if they are become too delinquent. I think that's one thing because you kind of know your customer. And but if you're selling, widgets online or something, you don't know your customers. They could place large orders. I guess credit management becomes a lot more important, right? So what are
Yeah, and yeah, I think of it, like I said, I'm not an accountant, but I did study economics, so I think of like the marginal cost, right? If the cost of what you provided was high, that extra unit, then you care more. So, for example, like you said, if you're shipping some widget, some actual physical good, you've shipped it and you've delivered it, and you have absorbed the cost of making that thing, distributing that thing, and therefore not getting paid is not only a loss of revenue, but it's a loss of recovering the cost of that thing that you did. I think the same is true for professional services. That's not a cost of goods sold, but it's a big operating cost. Somebody spent a lot of time, a lot of hours providing some service, and then to not get paid for it is not only again a loss of revenue, but it's a huge opportunity cost because that time could have been spent doing something else for which you got paid. Um, where people can afford to take a little more risk or companies can afford to take a little more risk, or maybe some like a SaaS company, right? Where that subscription, that one extra subscription didn't really cost you that much,
right? An
right?
extra
You're
software
kind of
license and a little Amazon Web Services doesn't cost you very much. versus,
Correct. Right. Yeah.
a dozen kegs of beer and the liquor distributorship costs a lot.
Exactly. I mean, when I was a distributor, the gross margins for a distributor are below 30%, right? 20%. So they're not a lot. If you're out that keg of beer or case of wine or whatever it is, that's actually pretty painful. So yeah, I would say any business where your cost of delivering the product is high on an incremental basis, then that's kind of a double whammy, right? Because you lose the money and you're also out the expense of that product.
Right. And from a know your customer perspective, if you don't really know your customers and their owners and anything about them, then being able to validate they exist, they're registered in good standing with the state, potentially you could, I don't know, you could search and see if there are any lawsuits open against them or something like that. I mean, just kind of getting to know your customer, even apart from their credit history, could head off some risk as well, I would assume.
Absolutely. So knowing all that, and we can talk a little more about other ways to take advantage of credit bureaus other than just the credit score, but getting that kind of information, automating access to that information, um, really saves a lot of time and reduces a lot of that risk. Um,
So this all sounds great if you could get the customers to submit information, ideally, financial information. But apart from that, if we're just looking at payment history, if you could get, small and mid-sized businesses to consistently report, it would become, like a flywheel. It gets going, everybody's seeing the benefits, every, you're benefiting from the fact 10 other suppliers and vendors submitted the information on customers, and you're starting to overlap and build a database of small businesses that you can actually use to evaluate creditworthiness for your own customers, right? But right now, nobody has a lot of incentive or sometimes even ability to extract that data and submit it, even if they kind of wanted to, right? So it just seems like a challenge, chicken and the egg, right? Until there's a clear benefit to make the effort, you don't want to make the effort, right? Um, and so you got to get some benefit from people who want to make that effort.
Absolutely, so it is a big chicken and egg problem. So if it's a collective problem. It's businesses, especially businesses within certain industries, right, helping each other by sharing this information, kind of limited amounts of information anonymously. Um, I think that's why there's other value to participating in one of these credit bureau exchanges beyond the credit score. So even if you're at a situation currently where not a lot of information is available about, say, one of your customers to give you really warm and fuzzy feeling about their credit score, there's other information that you can access as part of contributing. And some of it is back to that Secretary of State registration, official addresses, um, information about your customers that can help keep that customer list clean, you know, avoid maybe somebody submitting a fraudulent, invoice with delivery to a different address than products are, should be going to. Um, so yeah, there is a way to, and this is a lot of what we do at Traverto is, we make it super, super easy for people to contribute. So literally within about 30 seconds, right? You can connect Traverto to QuickBooks, and then you can start getting value from these credit bureaus and decide which ones you want to increase participation with. Um, and get a lot of that information back, just to, even without credit scores, before we can get to that again, um, just to improve the quality of that underlying customer data.
Okay, so Truverto is becoming an intermediary between the business and the credit bureau, where it's extracting the information to make it easy to submit, so it's not a big undertaking to submit the data. And then in exchange, you can get back data from the credit bureau in a form that's digestible for you. Is that the gist of it?
Yeah, previously it was a very manual process, which was bad for the business who wants to participate, because it was something they had to do every month. They had to remember to do every month. They had to do it a particular way. If they wanted to work with two credit bureaus, they had to do it for each of them in their own particular way. But it was also bad for the bureaus because they have to ingest, retrieve that, receive that information, and kind of like we said earlier, for them to work with a lot of small businesses is more expensive for them to work with a fewer large businesses under a manual process. But by automating it, all of that goes away, right? So now a business can contribute really at the click of a button. And then because as that kind of intermediary, um, we're providing the information securely to the credit bureau, we make it more efficient for them to work with more small businesses because now they're getting it always the same way, the structure they want, the time they want, the cadence they want, etc. So it really makes that entire process a lot more efficient and a lot more effective. And it's why we think it's a really great asset that small businesses are not taking advantage of. That is literally free. It's a barter system, right? You're giving some data and you're getting some data back, but it does not require subscription. It doesn't require writing a check, right? So it's just that participatory kind of collaborative exchange that now for the first time is fully automated.
Hmm. Well, you're trying to solve a big problem nationwide, if not internationally, right?
Yeah, and really trying to help both sides because if you're a business, and this has happened a lot in the past, you want to improve your own credit score, just like consumers think about improving their own credit score. But in the business space, you really can't do it. The only way your score gets better is if your suppliers provide information about you. So you want your best suppliers to tell Dun and Bradstreet and Credit Safe and others how well you're paying them because it boosts your score, right? So this is kind of for good actors. This is great news for them and helps them with their business. For bad actors, maybe it compels a little discipline, right? Because then they see the impact of maybe some not so great business practices, and it encourages them to improve those in order to get their score up and be a more reliable participant in the business community.
Yeah, certainly makes it brings a lot more transparency to the space, right? If you're dealing
Absolutely.
with public companies, you can pull their 10Ks and 10Qs from the SEC's website and do some quick analysis pretty easily on public companies to see if they're in financial trouble or not, and calculate their days payable outstanding and a couple basic ratios easily enough. But if you're dealing with, private companies, even really big private companies, you have no access to that kind of data.
No, not at all, right? So back to your chicken and egg problem, the good news is that it's really easy and actually free to start at the basic level and start to get some information and start to be again a member or a participant in the community and start to improve that transparency for everybody else. And actually, if your best customers will they should thank you for it, right? Because you're basically improving their score by providing that information. You're making it easier for your best customers to get good credit terms from their other suppliers that they might buy from in other industries, bank loans, and you get into things like factoring and asset-based lending. I mean, there are other areas that get more kind of technical and complicated where this stuff really matters, and you're doing your customers a big favor by providing it.
Yeah, I'll tell you, that's a good point because you know, business owners get to a certain age and they get tired of personally guaranteeing things and, you know, agreeing to put a lien on their house and things like that. And they just want to stop doing that. And you go to a traditional lender like a bank, you have to do that. SBA loans, you have to do that. So we have clients that go to factoring companies or more expensive, but non-bank lenders where they don't require personal guarantees, but the interest rate can be a lot higher, and the lenders may have access to some data, but not great data. And so I think kind of outside of the traditional bank lending space, this could be really helpful in kind of differentiating folks with good credit from bad credit and making it cheaper to borrow and factor for folks with good credit.
Yeah, 100%. I mean, you mentioned transparency a while ago, and you know, the more transparency you have, the more you lower risk, The more you lower risk, the more you make those kinds of things less expensive, right? Because if the risk is high, then lenders, suppliers, right, they add a risk premium to any interaction with you. And if we can collectively lower that risk, then operations get less expensive for all of us, right? Funding our companies gets less expensive for all of us. So it really, it takes a village, um, but there's a great way to get started, and then as we've seen with a lot of kind of newer technologies, the network effects, right, to use that kind of buzz term, start to add up really, really quickly.
How many major business credit bureaus are there now? Who are they?
So, good question. So, Dun and Bradstreet is the one probably everybody knows. They've been around for, I don't remember, 180 years or something, a long time. And the Dunn's number, the Dun and Bradstreet number, is kind of a de facto ID for companies. Right? A lot of listeners have probably submitted a credit application and had to provide their Dunn's number on their credit application. So that's the biggest one, but it's become more competitive lately. So there's another credit bureau named Credit Safe who got their start in Europe. You can kind of think of them as maybe the D&B of Europe, who's now building their presence in the United States. Experian, of course, maybe more better known on the consumer side, also does business credit scoring. And then Moody's, who a lot of people think of Moody's as the rating agency for public companies and bonds and things, but they also have a division that does credit scoring and reporting. So those are really the big four. Less well known are there are a lot of groups out there. There's a group called the National Association of Credit Managers um, that has regional chapters around the country, and businesses will participate in that. There are other industry focused groups. So, I think the world we're trying to help, or the thing we're trying to help businesses do, is take advantage of all of these, right? Because if you automate the process, you don't have to pick one of those four, or you don't have to pick one of those regional groups. You can participate in all of them, and then you can use the combined information you get back from all of them to really have the best source of data possible to help you know your customer. We call it a golden record.
Right. So Traverto is really consolidating all that data in one place, so you don't have to worry about asking four different credit bureaus for the data. You just go to Traverto and get it.
Exactly. So, in one situation, maybe CreditSafe knows more about one of your customers. And then for a different customer, maybe Dun& and Bradstreet knows more. We'll always combine them so that you have the best set of information for each of your customers.
And so is Traverto, launched and live and people could go start using it, or kind of where is it in the development and go to market at the moment?
Yeah, thank you. So we in the last month we've launched on the first two platforms, first two accounting kind of platforms and integrations. So it's available for QuickBooks Online. You'll find us. Anybody can find us in the QuickBooks store. Well, in the U.S. anyway. So right now it's limited to the U.S., but in the QuickBooks U.S. store, you'll see Traverto. Getting started really takes like 30 seconds. All you have to do is, for anybody who's added another app to QuickBooks, they'll be familiar with the process. Super easy. The second accounting platform or ERP we support is Microsoft Dynamics Business Central. Um, Also really, really easy to get started. A few minutes instead of a few seconds, but the same kind of concept. So that's where we are today. We have a special integration with CreditSafe. So anybody who starts to use Traverto today, even before you start to decide you want to contribute information, say to a bureau, you'll get some limited information from CreditSafe for free. I mean, basically, obviously, as an encouragement to participate and do more. But that initial, call it teaser data and kind of freemium model gives people some basic risk scores and company information at no charge, so they can get a better sense of how valuable this data could be and how it would help them. And then from there, they can start to add on kind of other credit agencies and other experiences.
Hmm. Okay, no, we did a test. I submitted a customer list to you, and you came back with some validations of email addresses and I think maybe state registrations and a couple other data points and kind of a basic, like low, medium, or high credit risk from Credit Safe. So I thought that was kind of interesting, especially if I didn't know my customers very well. It'd be helpful to at least be able to validate who they are, they're in good standing, and Credit Safe's at least basic assessment of their credit worthiness.
Yeah, absolutely. And then to track that over time. So it's one thing to know what their kind of profile is today, but then to track changes. So if you see somebody go from, high to medium or medium to low or low to medium, right? Those are strong signals. If you see a customer's credit risk, we've talked a lot about credit risk as a fear factor, right? Like they might not pay me. This is something I need to worry about. I try to encourage people to look at it from the other side too. Like let's say somebody's credit risk goes from medium, risk to low risk, right? So that would suggest their business is improving. That might translate into a sales opportunity,
Focus your
right?
sales and marketing on good customers that are low risk, right?
Exactly. So if somebody's credit score is actually getting better, then that might be another resell or upsell opportunity as that business is growing and being more successful. So it's yeah, we often, we talk about credit bureaus and we think about the risk, but even, just as important, I guess, is the upside opportunity of using the same information to boost sales and customer engagement.
Hmm. Hmm. So I'm hearing an increasing amount about fraud, and I did an episode a couple episodes back, and we're talking about. Thought we are going to talk about general bank fraud and payment fraud. It ended up being a lot of talk about crypto and crypto fraud, but there's a lot of, especially AI makes it so easy to impersonate people. You can send off a letter that says our payment address has changed or our bank account has changed. Start sending your money to this new place. And if I'm a kind of a low level accounts payable clerk at a business, I'm like, oh, this looks like routine. It looks like it's on the vendor's letterhead. We pay them something every month. I'm just going to update their address or their bank account information in the system because it seems like no big deal. And then all of a sudden you start sending money to a fraudster and it disappears and you can't get it back. And you still owe the money to the correct vendor anyway, right? So I'm curious how Joe could potentially mitigate that kind of risk.
Yeah, yeah, no, great question, and it reminds me kind of a funny story. Like, did you ever see the movie Catch Me If You Can
Oh yeah,
with Leonardo
yeah,
DiCaprio?
yeah.
Okay, so that Frank Abagnale, I think if I've got his name right, that's who it was based on. He wrote a book about it. It's a real story, or at least inspired by a real story. And I recently saw him at a National Association of Credit Managers conference, like presenting. So after that experience, and he went to jail for it, he then turned his life around in dramatic fashion and has been training FBI agents, for decades about fraud. And he gave a presentation and talked about, some of the things fraudsters do and the way they're using AI. And it is, it's kind of shocking, right? How quickly things are changing and how quickly they're progressing. And one thing they did in the room is they asked, and the room was full of credit managers, and they asked, how many of you have experienced an increase in fraud in the last year? And probably 75% of the room raised their hand, right? So it is increasing significantly. It's getting more sophisticated. It's a lot harder to tell, especially on your own, what's accurate and what's not. Um, and it's not just somebody creating a fake company. It could be somebody who's found a way to impersonate one of your existing customers. So you think this is, you've been selling to this person for a while and this is great. And oh, they must have opened a new office because this is a new address, but I'm sure it's okay. Right. And they'll find a way to be super convincing. Right. And before you know it, you've shipped product off to the wrong, to some place that you later find out is not actually your customer and it's gone. Right. And that's happening at an increasing rate.
Yeah, so I guess validating names and addresses at a minimum would be a good place to start. And if there were any way to validate, bank accounts, since the US still does a lot with paper checks, but we're increasingly moving to digital payments. So if there's any way to validate names and addresses and banks and bank account numbers. That would be incredible.
Yep, yep. But as you said, a good start is just, going back to the discussion about credit bureaus is, even without getting to the credit score, one thing they provide is address verification, right? Including branch offices, right? And subsidiaries. So knowing that relationship between different parts of your customer and which locations are true locations or not is great information to know when trying to catch potential fraud, even without having to wonder about credit scores or payment terms, et cetera, right? So it's back to your chicken and egg problem that you brought up earlier. That's kind of an immediate kind of valuable way or a way to get value, as you get started, and then continue to grow and do more from there.
Hmm. How deeply are you planning to kind of embed into QuickBooks and other accounting software versus just kind of have a dashboard that you can view and manage within Triverto?
Yeah, no, good question. I'd love to get feedback from you and other clients, because one thing in the last company we talked about at the very beginning with Tally Street, kind of the real value in Tally Street was we integrated with CRMs as well as accounting systems. So we could take information we learned about customers and then put it into HubSpot, right, or put it into Salesforce, and people call that enrichment, right? You're enriching the customer records in those sales and marketing systems. And we think there's a great opportunity to do the same thing in accounting systems, right? QuickBooks now supports custom fields. I mean, there's ability to go in and make what's in the accounting system, the customer records in the accounting system, not only more accurate, but smarter by enriching it with extra information. And I think that's something we want to see more of is creating those customer master records that are valuable not only for the accounting team and the finance team, but that sales teams and marketing teams will also find valuable and useful, right? So it lets the accounting team and the accounting data play a more important role in the overall success of a small business.
Right, right. I mean, I would assume you could do a lot of cool stuff within Triverto dashboards that might be hard to replicate if you have to do it in 5 or 10 different accounting software.
Yes. Yeah. Yeah. We also, with the experience with Traverto is you do get a dashboard. You get a lot of analytics in the dashboard all the way down to the customer level. You can manage all these engagements with credit bureaus as you want to, as you select them. But we're big believers in, I don't know, call it like the democratization of information, right? We're not trying to hoard it inside Traverto or inside a dashboard. We want to get it out into the other places where businesses can find it useful.
Right.
For example, putting it back into QuickBooks.
Yep, yep. Or whatever CRM systems salespeople are using to try to head off bad sales or e-commerce systems that are taking orders and trying to flag bad orders and things like that.
Yep, yep.
Yep,
We see more businesses using things like Power BI as a way to do more reporting, get information out of different systems. So, I mean, that's another example where the information gets pushed into, Microsoft OneDrive, or maybe it's Google Drive, right, in ways that it can be better shared and used for analytics and customer reviews and things like that.
so what's your longer term vision for Traverto? What do we talked in general what you're trying to accomplish and tactically some of what can be done now, but like over the next 5 or 10 years, what's your vision for the business?
We're really focused on customer intelligence, right? So we want to help small businesses, small and mid-sized businesses. We're not focused on Fortune 500 companies or Global 5,000 companies, but we really want to help small and mid-sized businesses have better, more accurate information about their customers. A lot of that will come from their own data, right? So a lot of the analytics come from just better analysis of the data that's already in that SMB systems. But then it also comes from the smart addition of third-party data from places like trusted sources like credit exchanges, credit bureaus. Um, so our goal is really our long-term kind of vision or objective is really to be that customer intelligence layer at a business, where we help them know kind of as much about their customers as they can and be able to use that as effectively as possible. Again, not only within accounting, but across sales, marketing, customer support, to make their businesses more successful.
I can think of a simple piece of data that would be awesome to have in QuickBooks, which would be, average days to pay for customers. Like if somebody asks about me about, customers' average days to pay, I'm like, that would be like a major project to go calculate that across their customer base. It's not easy, but I assume you can just make that automated, extract the data,
We
crunch the numbers, or potentially plug it back into a custom field.
Yep, we already provide that today. So today you can get Traverto will already tell you the average days to pay across your entire customer base, but also for every individual customer, and with trending information, right? So you can see how that's changed over time and who's getting better and who may not be.
Yeah.
And then when you bring in the credit bureau exchanges, then you have the average day to pay across your whole entire customer base. You have the average days to pay for each individual customer of yours. And then you also know how long each of your customers takes to pay other people. And and that's really useful information because you might find out that, maybe your credit terms aren't that competitive, or maybe you could, be a little more flexible, right? Or maybe you could give them more credit or less credit, right? So it's that extra information becomes hugely valuable for managing your own kind of AR and collections, but again, also the sales process.
Yeah, I remember in my first business, I'd sit down with my controller every week and look at the AR aging and talk about collections and credit risk. And, he'd say like, "Oh, don't worry, they always pay in 45 days, so it's not a big deal." I'm like, "Well, I've no way to verify that, so I'm just kind of trusting, but I can't verify it." And so I was just kind of nervous about the whole situation. But it'd be great if I could see, okay, here's the average days to pay. Here's the trend over the last 12 months. Okay, this customer does pay in 45 days most of the time, and it's pretty stable. So, although they're 40 days outstanding now, I don't think that's a big deal. Versus somebody who typically pays in 20 days, and now all of a sudden it's 40 days. It might not look like a big deal, but now they've doubled their time to pay.
Yeah, I mean, from a risk perspective, that's why that trending exactly. That's why that trending is so important, right? To see those changes. And at the very beginning, you talked about cash flow and managing cash flow. Well, if you know each individual customer's average days to pay, you can do a much more reliable cash flow forecast, right? Because of all the invoices you have open, you now know when each of them is individually kind of likely to come in, and that adds some predictability to the business.
Yeah, and if you don't have a big cash reserve, you're having some cash flow problems, that's very painful right now, and you're trying to prioritize who to pay and how much to pay and what might be collected over the next week or two, but you're just kind of guessing. But I think you could probably much more accurately predict cash inflows with days to pay type information.
Absolutely.
Yeah.
Yep. Yeah. No, that's a great point.
So, anything else, Brian, you want to mention before we wrap up?
No, I think this has been a fantastic conversation. It's thanks for the opportunity to kind of be here and hopefully help share some information about ways that small businesses can take advantage of extra customer information that maybe they didn't really know about, or thought it was going to be harder than it is, right? Than it is in using today's tools and techniques.
Right. So if listeners want to try this out, check it out. What's the thing they do? They go to the QuickBooks Marketplace if they're on QuickBooks, or they go to whatever the equivalent is with Microsoft Dynamics.
Yep, you have three good options. You can come directly to the Traverto website, and start there. There are also some articles, to kind of learn more before you make a decision to kind of get started. So the Traverto website's a great place to go. The onboarding process will walk you through everything. Again, it takes like seconds to minutes. Um, the other two places are, yes, you can go directly to the QuickBooks App Store, or if you're Microsoft, you can go to Microsoft App Source, their App Store for Business Central, and those are also really easy places to get started. So those would be the three best options: the Traverto website, QuickBooks, or Microsoft.
Great. Well, thanks so much for joining us, Brian, and sharing this information. It's certainly been a little eye-opening for me because, you know, small and mid-sized business credit reporting is something I just haven't paid much attention to because I haven't felt it's been very useful. But I can 100% appreciate how with Traverto automating and providing those insights could be tremendously valuable.
Right. Well, Thank you again for having me, and thanks for some of the the stories and the experiences that that you shared that really kind of highlight the opportunities here.
Sure. Well, best of luck with everything, Brian.
Thank you.
So this has been another hopefully exciting, if not exciting, then at least an educational and thoughtful episode of the Empowering Healthy Business podcast. Talk to you all next time. Another episode in the books. Thank you so much for tuning in. For show notes and more, visit empoweringhealthybusiness.com. If you would like to have a one-on-one discussion with me or possibly engage smartbooks to help with your business, you can reach me at C-A-L, at empoweringhealthybusiness.com or message me on LinkedIn where I am easy to find. Until next time, this is Empowering Healthy Business, the podcast for business owners, signing off.